Good morning, everyone. Today we're diving into one of the most talked about topics in the world of cryptocurrency, SUI. Whether you're a seasoned trader, a curious investor, or just someone who's heard the name buzzing around social media, you might be wondering, what exactly is SUI, and why is it suddenly on everyone's radar? SUI is the latest buzz in the crypto world, a new blockchain designed for speed and efficiency. But it's more than just another digital coin. SUI aims to solve some of the biggest challenges in blockchain technology, like slow transaction times and high fees, by introducing a unique architecture that allows for lightning-fast processing and low costs. Picture it as a digital highway built to handle massive traffic, making gaming and payments smoother for everyone. Imagine thousands of transactions zipping by every second, with barely any delays or bottlenecks. This is what sets SUI apart from many older blockchains, which often struggle to keep up when demand spikes. This technology has caught the eye of both seasoned investors and newcomers, all watching SUI's price for clues about its future. The excitement isn't just about the tech, it's about the potential for big gains, and the fear of missing out on the next big thing in crypto. Social media is buzzing with speculation, and crypto influencers are weighing in with their predictions. Some see SUI as a game changer, while others urge caution, reminding us how volatile this space can be. The big question on everyone's mind: will SUI's value skyrocket, or will it stumble like so many hyped coins before it? The market is watching every move, and even small news can send prices swinging wildly. To answer that, we'll use Elliott Wave analysis, a tool that helps us read the market's mood and predict possible price moves. This method looks at patterns in price charts, helping traders spot trends and reversals before they happen. Think of it as a weather forecast for crypto, mapping out sunny rallies or potential storms. Just as meteorologists use data to predict the weather, analysts use Elliott Wave to anticipate where prices might head next. Today, we'll break down two scenarios, one bullish, one bearish, and highlight the key price levels to watch. We'll show you what signals to look for so you can make informed decisions whether you're thinking of buying, selling, or just observing. By the end, you'll know what's driving SUI's price and what to look for next, no matter your experience level. So, get ready to explore the world of SUI, and let's see if this blockchain can live up to the hype, or if it's just another flash in the pan. Before we dive into SUI's chart, let's quickly cover Elliott Wave Theory. This theory, developed by Ralph Nelson Elliott in the 1930s, is a form of technical analysis that traders use to analyze financial market cycles and forecast future market trends by identifying extremes in investor psychology, highs and lows in prices, and other collective activities. Imagine market prices moving like ocean waves, surges forward, then pullbacks. Just as the ocean has a rhythm, so do the markets. These waves are not random, they follow a pattern that can be identified and predicted. Elliott discovered that markets move in 5 waves up, then 3 waves down, driven by investor psychology. The 5-wave sequence is known as the impulse phase, and the 3-wave sequence is called the corrective phase. This pattern reflects the natural ebb and flow of market sentiment. The 5-wave pattern marks the main trend. 3 strong upward moves, separated by 2 smaller pullbacks. These waves are labeled 1, 2, 3, 4, and 5. Waves 1, 3, and 5 move in the direction of the trend, while waves 2 and 4 are corrective pullbacks. After that, a 3-wave correction, ABC, typically follows, moving against the trend. This corrective phase is essential as it provides a counterbalance to the impulse phase, allowing the market to consolidate before the next major move. These patterns repeat on all time frames from minutes to years. Whether you are looking at a 1-minute chart or a yearly chart, the Elliott wave patterns can be identified, making it a versatile tool for traders. Analysts use this to pinpoint where we are in the cycle. Are we in a powerful surge or a pause before the next move? Understanding the current phase of the market cycle helps traders make informed decisions about when to enter or exit trades. Identifying the current wave helps traders forecast likely price paths. By recognizing the wave pattern, traders can anticipate future price movements and adjust their strategies accordingly. It's a way to bring order to the chaos of the markets. The Elliott Wave Theory provides a structured approach to understanding market behavior, turning what might seem like random price movements into a predictable pattern. Now let's see how this applies to SUI. By applying the principles of Elliott Wave Theory, we can analyze SUI's price movements and make more informed trading decisions. Let's dive into how Elliott Wave Theory can help us understand what's happening with SUI right now. This classic technical analysis tool is used by traders worldwide to predict market cycles and identify potential turning points. By breaking down price movements into waves, Elliott Wave gives us a framework to anticipate what might come next, especially in volatile markets like crypto. Most analysts are seeing a bullish setup forming on SUI's chart. The first major move up, known as Wave 1, appears to have completed. This initial surge often catches the attention of early adopters and signals the start of a new trend. It's the phase where optimism begins to build, and momentum starts to shift in favor of the bulls. Right now, SUI is experiencing a Wave 2 correction. This is a natural and healthy part of the cycle, where the market takes a breather after the initial rally. During this phase, early investors may lock in profits, and some uncertainty creeps in as prices pull back. Corrections like this can shake out weak hands, but they're essential for building a solid foundation for the next move. This dip isn't a sign of weakness. It's actually expected and often necessary. It helps reset overbought conditions and allows new buyers to enter the market at more attractive prices. Historically, these corrections set the stage for the next big surge, as they clear out excess speculation and prepare the asset for renewed momentum. Right now, SUI's price is sitting in the typical Wave 2 target zone, which analysts calculate using Fibonacci retracement levels. These levels are a favorite among traders for pinpointing where corrections might end and reversals could begin. The retracement zone acts as a magnet for price action, drawing in buyers who are waiting for the perfect entry. Specifically, the zone between $3.19 and $2.64 is attracting a lot of attention. This is where many traders expect buyers to step in aggressively, seeing it as a value area after the recent pullback. If SUI can stabilize here, it could mark the end of the correction and the beginning of a new upward phase. Holding this support zone is crucial. If SUI manages to maintain these levels, it's a strong signal that the market correction is wrapping up. This kind of price action often precedes a powerful Wave 3 rally, as confidence returns and more traders jump in, eager not to miss the next big move. Wave 3 is typically the most explosive and dynamic part of the Elliott Wave cycle. It's fueled by renewed optimism, heavy buying, and a sense of urgency as traders and investors rush to participate in the rally. This is where the biggest gains are often made, and the price can accelerate rapidly to new highs. If this scenario unfolds as expected, SUI could break out to significant new highs, surpassing previous resistance levels and drawing even more attention from the broader market. Such a move would confirm the bullish outlook and potentially set the stage for further gains. That's why traders and investors are keeping a close eye on SUI right now. The next few days could be pivotal, as the market decides whether to launch into a powerful Wave 3 or continue consolidating. Either way, understanding these patterns gives you an edge in navigating the volatility and spotting opportunities before the crowd. Let's zoom in on the key price levels. The $3.19, $2.64 support zone is defined by Fibonacci retracement, areas where prices often bounce. The $2.90 level is especially important, acting as a golden pocket where technical indicators and trading volume converge. If SUI bounces strongly from here, forming a new 5-wave pattern up, it confirms the correction is over. Traders are watching for a decisive move up from this zone as a green light for the next rally. Every price candle now offers clues about the market's next move. If SUI forms a clear impulsive structure upward, confidence in a bullish Wave 3 grows. All the ingredients for a classic bullish setup seem to be falling into place. But nothing in trading is certain. The bearish scenario? SUI's recent dip could be the start of a bigger downtrend, not just a correction. If support at $2.90 and $2.64 fails, sellers could push SUI much lower, possibly retesting $1.72. Weak, choppy rallies would signal sellers are still in control. A break below $1.72 would invalidate the bullish outlook and confirm a deeper bear market. This risk is why traders set clear invalidation levels. Always be prepared for both outcomes. So why do most analysts favor the bullish case? The bearish pattern, a leading diagonal, is rare, especially on higher time frames. For it to play out, we'd need two uncommon patterns in a row, making it statistically unlikely. Time analysis also suggests the current correction has lasted too long to fit the bearish script. The decline looks choppy and corrective, not sharp and impulsive. This fits a bullish wave 2, not a new downtrend. The evidence points to a correction, not a reversal. That's why the bulls have the edge. No matter your bias, watching the right price levels is crucial. For SUI, the key support zone is $2.90, $2.77, the bull's last stand. A strong bounce here signals the correction is over and a new rally is starting. The $2.90 level is especially important due to its technical significance. On the flip side, $1.72 is the ultimate invalidation for bulls. If SUI drops below, the bullish case is off. For bears, a rally above $3.85 would invalidate the bearish setup. These levels are your roadmap. Watch how SUI reacts at these points to guide your next move. The market's reaction here will tell the real story. So where do we stand? As of September 9th, 2025, the bullish scenario is more likely. The price action fits a classic corrective wave 2, not a new bearish impulse. The rare patterns needed for the bearish case make it a long shot. Still, probability isn't certainty. Always have a plan if the market shifts. If SUI breaks below $2.77 with weak bounces, be ready to reconsider. A break below $1.72 confirms a bearish trend. Until then, the bullish outlook stands, but stay alert. React to the market, not your hopes. Wrapping up, SUI's chart points to cautious optimism. Elliott Wave analysis suggests the current dip is a healthy correction before a potential surge. The key is to watch support at $2.90, $2.77. How SUI reacts here will reveal the next move. For beginners, focus on these levels. They're your guideposts. A strong bounce signals a likely rally. A break below $1.72 means it's time to rethink. Trading isn't about certainty, but preparation. Have clear entry, exit, and invalidation points. The market writes the final story. Stay curious and disciplined. Look for a 5-wave move up as confirmation. By following these steps, you'll navigate SUI's waves with more confidence.